Hello traders, Gary Wagner here, approximately 1:40 in Honolulu, 6:40 in New York on Thursday, 9th day of December, 2021, and this is the daily report for gold and silver. Based on dollar strength as well as strong data showing job growth in the United States, did pressure gold today, currently down $9.60 at $1,775.90. However, if the economic forecasts for the inflationary index, which will be released tomorrow, are correct, I believe that gold will begin to move higher and challenge $1,800. We will talk about that during our chart section. Dollar strength accounted for more than half of today's decline in gold pricing, with the dollar index at 92.225, which is a net increase of almost 0.4%. Silver and silver futures continue to trade under a lot of pressure, giving up 2.10%, 47 cents, taking it below $22, and is currently fixed at $21.96. As you know, the daily members page contains an opening letter in which we discuss the fundamental events, and the show is really based upon technical analysis for the most part. However, that is not the case today. In my mind, it is all about the CPI inflation index numbers that will come out tomorrow. We came in at 6.2% last month for the month of October. It was the first occurrence of inflation levels at that rate since November of 1990. It is now forecast that we'll see an uptick of 0.07%, which means that would take the year over year to 6.8%. And the last time we hit that was in the mid-1980s. If you recall, in the beginning of 1980 through 1983, we had a tremendous bout with inflationary pressures. It led to one of the worst recessions since World War II, and it was based upon supply chain shortages, but the supply chain shortages were embargoes by Iran, and it had to do with oil. So while there's different reasons for the recession that occurred then and the recession that is occurring now, the result in both cases have been inflation that we haven't seen in years. Now, what is the takeaway? When we look at the chart of how long it took the U.S. government to bring inflation down to normal levels, it was a 3-year process. I'm putting up a listing of the various levels of inflation through the 80s. And why that is important is because if it comes in at the forecasted level of 6.8 or higher, we have some challenges. And the challenges are that no matter how aggressively the Federal Reserve is, one, we know that it will cause an economic contraction. It will cause issues that way. But more importantly, it will be a multi-year process. While the inflationary pressures in the 1980s were much more extreme than they are now, it still took over 3 years to normalize rates. Now, we're at the end of 2021. That means that if it takes 2 or 3 years, we will not have inflationary normalization till 2024, 2025. In the meantime, what do you think that will do to the price of gold? And that's why I believe tomorrow's report is so very critical. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Friday for the weekly wrap-up and review. Bye-bye.